You're welcome here. So today we'll be starting our Read with Me series, and it's going to be in form of podcast. And what we'll be doing in this series is reading psychology book and try to learn together trading psychology. So it's going to be a very long one, and we're just going to be studying together, reading and try to learn one or two from, as we are trying to develop our trading abilities in trading, so that we'll be able to become more successful in our trading career. And mind you, trading takes four things. There are four pillars to trading successfully, which is number one, you've got to have a very good strategy. Number two, your risk management must be very, very solid. And number three is psychology. Psychology, which carries at least 70 to 80% of your trading sources. And number four is gathering experience every day. That one too is 100 on its own. Because if you are not showing up every day, if you are not trying to develop yourself and try to build more on what you learned yesterday, today or tomorrow, there is no success eventually. Because when the success might eventually come, it might not be there because you are not showing up. So it's better to show up every blessed day. So you show up, you gather experience by showing up every day. So mind you, number one is strategy. You must be able to have a very good strategy in the market so that will be your winning edge. And your major edge is what is it called? Risk management. Your risk management, you must be rigid and solid on and with your risk management. So without further ado, let's just jump into it. So the book we have before us today is Trading Psychology for Dummies. It's a Willie brand, and we're going to you know, we're going to start reading it. It's a 290 pages book, and I believe if we are very consistent with it and show up every day, we'll be able to at least move far and go forward in reading it. So join me as we continue. And this is Learning Made Easy, Trading Psychology for Dummies, a Willie brand. And what we'll be learning from this book is discover how psychology is applied in real world trading, implement practical tips, and see first-hand results, gain the perspective and insight of a veteran trader. So these are the three pillars of things that we'll be learning from this trading psychology for dummies. This is person that wrote the book is Roland Ulrich, a CFA certified financial analyst and a trading psychology expert. So this is the book, and the book was produced 2022. It's the latest one. So and it's very very something that we're going to at least learn from. So content at a glance, introduction. That's first thing. Part one of the book is the suffering trader. And chapter one is brain compatible trading, developing mental strengths. Part two, making a successful trade, developing your personal trading system. That's chapter three, implementing your trading plans. Emotional sovereignty is part three, seeing trading as personality development. So seeing trading as personality development, and which is trading is a personality development because if your personality has any flaw, it is going to reflect in your trading. And practicing mental self-coaching, chapter 6, chapter 7, the psychology of coping with losses, adopting techniques for coping with stress and anxiety, chapter 8, making decisions safely, part 4, untangling decision making hidden parts, using evolutionary rules of thumb and finding the right basis for decision making in trading. These are all chapter 9 to 11 under part 4. And part 5 is keeping bad behavior in check. Chapter 12 to 15, avoiding obvious mistakes, dealing with the stock exchanges collective behavior, getting a better grip on your trading ego, fear, your constant trading companion is going to be there for as long as you are trading. And part six of the book is part of 10. If you are used to reading for Dummies book, you will understand part of 10. And chapter 16 is 10 psychological traps to avoid when trading. And chapter 17, 10 success secrets of mentally superior traders. And chapter 18, 10 guiding principle for the perfect trading day. So this is content at glance. I'm going to go into content, table of contents, which elaborates all what we've just said. So we're just going to skip that and just go straight into introduction. So introduction of the book is a trading psychology, the psychological basis of securities trading. Trading psychology generally isn't taken very seriously, even though experts maintain that your emotions and your mental states are actually what determines the success or failure of your trading business. Those in the know are clear on that point. Trading is 80% psychology and 20% methodology. Trading is fundamentally a matter of character. And this is the reason why I'm even bringing this series, because we've been analyzing and we've been giving trade ideas and signals here and there. But at the same time, trading psychology is something that will determine your success in the long run. So you've got to understand that trading is 80% psychology and 20% methodology. Even though our trading ideas and signal deals with the methodology, but what we need, everybody, with the way I'm giving the analysis, we are making money from it, and some people are making money from it as well. But how much you make from it depends on your psychology. So trading, the second paragraph now is said trading, the common term for the short term trade in securities, currencies, and financial derivatives. As if trading has become increasingly popular recently, which is true. Almost everybody knows about trading now. Discount brokers, especially, have been seeing record numbers since 2020. They promise they will make stock market trading as easy as pie with the help of their various trading apps, of which is true too. This has been a certain attraction for a younger, less experienced generation and encourages gambling. And for what we have these days, a lot of people are just gambling in the market. They're not really trading with a probability hedge or seeing it as a numbers game. Everybody just wants to grow rich as quick as possible, and they are just gambling. But a word to the wise: if you are looking for an adrenaline rush and you think that leverage products will make you rich overnight, you are sure to hit the rock sooner or later. Trading in financial instruments is a sophisticated business and requires not only lots of patience and discipline, but a clear head as well. So if you are trading financial instruments, it's a sophisticated business and it requires not only lots of patience, it also requires discipline, and it requires clear head as well. You don't stand a chance without a plan, a strategy, and process you can rely on. Which means, it's the part of what I said in the beginning: strategy, risk management, psychology, and experience. And this place, it states here that you don't stand a chance without a plan, a strategy, and process you can rely on. So regarding terminology, I would like to make one thing clear from the start. When I say traders in this book, I'm referring to those private investors who independently invest their own money on the stock market at their own risk and on a short-term basis. The time, so you don't stand a chance without a plan, a strategy, and processes you can rely on. So you don't stand a chance without a plan. You need a plan, you need a strategy, and you need processes, which are all involved in your strategy or your trading, whichever way. So regarding terminology, I would like to make one thing clear from the start. When I say traders in this book, I'm referring to those private investors who independently invest their own money on the stock market at their own risk and on a short-term basis. The time period can be as short as few minutes scalping or as long as a few weeks position trading. We are dealing with psychology here. If you don't know what that is, I don't, whichever way, but I believe you are a trader and you are here, you already know what scalping and what position trading is. So fundamentally, trading in this sense is the opposite of a long-term investment. You are looking for calculated short-term profits. If you make regular contributions to a stock portfolio in order to prepare for retirement, you are a long-term investor, not a trader. Admittedly, you could turn a trading position into a long-term investment now and then, perhaps because you don't want to sustain a loss. So I believe those are for uh, new traders, developing traders that just markets go against them or they don't even know the reason why they enter market in the first place. And they don't want to lose the market, so they decide to hold on. Some even add money to their accounts just for the market not to go against their position. Hmm. So, um, so admittedly, you can turn and so you use a bit of mental judicial on yourself while your short term investment is now presented as something you would always intend as a long term investment. So I talk more about this bias known as mental accounting later on in this book. I know the suspense is killing you. I guess this suspense is killing us, and we want to also quickly jump into the books and begin to learn from it. So the stock market is all about psychology and trading places psychology under a magnifying glass. The stock market is all about psychology. And there are levels, there are psychological levels in the market, which are, your resistance level, your support levels, support on resistance. All these levels are all psychological levels because 70% to 80% of traders are watching those levels as same way you are watching it. So it's a psychological level in the sense that all of us are thinking either to buy from the level or to sell from that same level. So it's a psychological levels, and now, which bring us to the statement of the fact that the stock market is all about psychology and trading places psychology under a magnifying glass, limiting beliefs, self-doubts, a lack of self-control, unprocessed traumatic experiences from the past, those negative conversations you hold with yourself, self-talk to use self-talk to use current jargon, and harmful pattern of thoughts will all come to light sooner or later as you go about your work as a trader. As such, trading turns out to be a quiet and expensive way to walk through your personality issues, which is true. Trading is very, very expensive way. It's an expensive way to walk through your personality issues. After all, you are risking your own money on the market. Conceivably, money in the form of savings you worked very hard to accrue. And the numbers are against you because according to statistics, over 90% of all private traders on the stock exchange don't earn any money. The vast majority close their trading accounts within a few months, feeling frustrated, often after suffering a total loss. The success rate is particularly low for those operating in the short-term arena, like said and well said. An old stock market proverb puts it well. If you don't know yourself, the stock market is an expensive place to figure out who you are. The traders who are successful have not only often learned some quite expensive lessons, but have also experienced quite the emotional roller coaster ride. However, they have moved beyond themselves, overcoming that which initially limited them. It is worth the effort, as experienced traders will readily acknowledge, having finally obtained their financial freedom. independence, and self-determination. They will refuse to give up such hard-earned gains voluntarily. So when you have dealt with the trading businesses long enough, you discover that it is always the very same problem that continue to drive you up the wall. Coping with losses, which are also the same problems we face here and there. Coping with losses, your fear, your hunger, your lack of discipline, the loss of control, stress, being overburdened or overconfidence. All such ill are direct consequence of the special features of financial markets you have to contend with. These are all the things that we face when trading, namely uncertainty, volatility, hyperbolic situations, barely visible actors. They have barely visible. And to top it all off, automated programs and algorithms that don't care a fig whether you win or lose. And that's the system we are dealing with. Price movements are neither as predictable nor as controllable as you think. You can't control price, you can't predict price. You only flow with whatever price is doing. And that's the reason why we have to convert it to numbers game, probability numbers game. And they happen to be more random. That's to top it all off. All these things are random in the market. So you won't move the markets as an individual trader. You can never move the market as an individual trader. You have no influence on what is happening in the market. What you can do is you can work with probabilities and patterns, just like I've said. Probabilities and patterns. Patterns is recognizing your strategy in the market, and probabilities is using your risk management, risk reward ratio to know what we can get from from uh trading. So you can also change your perception of the market, your attitude and point of views. In other words, you control those things that are within your power of to control yourself. So you can only control yourself in this market. You keep a clear head. This is how mental strength is created. This is how mental strength is created. Never let the market take control of you and your trader psyche. That's a very good instruction. Never to allow markets to take control of us and our traders like a successful process orientation and a fixed set of rules protect you from losing control. Protecting your portfolio is your top priority, and that's our business. That's the only thing we can control, and that's the reason why risk management will only be our trading edge. You have to control the amount that you are willing to lose in the market. So our evolutionary heritage weighs heavily. We are not naturally suited to trading. The human brain isn't designed to operate successfully on financial markets. The way the stock market works contradicts our naturally acquired ways of thinking and behavior. Therefore, it is even more important to internalize fixed routines and to systemize your trading so that you can protect yourself. That's a very good instruction for us. You will develop as a trader when you find out what you can control, which is yourself, what you can change and why. What are your trading goals? What are your expectations? What trading style matches your personality? Only then can you address the question of A, how you want to proceed, and B, which method you want to use. The challenge with trading is a psychological challenge. Trading platform and systems are important. They are important, but do not determine your success. Trading platform and systems, your strategies, and your platforms, the type of platforms that you use, they are important, but do not determine your success. You alone are responsible for what you earn with your trading, not the technology, not the systems, and not the markets either. So about this book about trading psychology isn't one of those heavy theoretical tones. I wanted it to be a practical book where I can offer advice The idea is to provide you with multiple examples, practical tasks, and useful exercise designed to build the psychological foundation you need in order to prepare yourself for the specific requirements of trading. Okay, well said. Beginners in particular underestimate the psychological stress factor involved in trading. I remember when I started trading, bro. There is nothing even we don't. I don't even consider anything psychological yet because I'm yet to determine. I mean, no. So all what I was after was trading strategy. I'm glad I did that and chased these trading strategies as well because it is what is helping me today. Because when I started out, I really want to know what move the market, what determines price movement, all those psychological levels. Learning about all these things eventually helps. But at the same time, after learning all those things and we are still not making money, there is something that we need to do and learn about, which is psychology. So beginners in particular underestimate, we all started from there, the psychological stress factor involved in trading. Getting rich quick on the stock exchange is a tempting proposition, but not at all realistic. We all fall into this trap, and it is what attracted us to trading in the first place because we believe that we can quickly make money out of this thing. When I started, I wasn't after a very huge amount of money anyway, but at least I'm looking for a replacement for my daily expenses. At least I want to start from there. If my daily expenses is covered with trading, then automatically I'll be able to dedicate more time to trading. And that was my idea. So fixated on that, I was just looking for a simple strategy that at least can quickly put that in my reach, within my reach. But as trading, we always prove you wrong, no matter what your something is when you started trading. When you start trading, to always prove you wrong. So it doesn't work out well. But we don't give up. We continue to learn, we continue to grow, and we continue to experience whatever markets bring to us. And that's what we do. So getting rich quick on the stock exchange is a tempting proposition, but not at all realistic, as the statistics confirm. And this is where many people stopped. When they see that their getting rich quick scheme is not quickly working here, they just do what? They zoom off, they take off. So they give up easily. And that's the reason why we have new traders every day, here and there. And when they read success stories that are pushed out or those that are selling courses online, it motivated them to come back once in a while. Then when they lose again, they've forgotten that they need to be gathering experience daily in this market, in this space. So this book will save you from many painful and expensive experiences. Okay. So that's a promise from the author. I will provide you with the mental armor you will need in order to trade in a successful brain compatible manner. He initially said that our brain is not compatible for trading evolutionary, but the way we are now, at least, is proposing, giving us something that's okay, giving us a promise that is going to provide us with a mental armor that we need in order to trade in a successful brain compatible manner. Trading is a hardcore business that punishes mistakes and weaknesses immediately. It doesn't wait. You are playing with the top echelon right from the start. And that's true. You are playing with the top echelon right from the start. Those that have been in the business for 30 years, 20 years, 15 years, when you start today, you are trading with them immediately. So that's one of the things that make trading the hardest profession you can ever embark on in this life. So whether you're a professional or an amateur, you are all competing in the same market. Regardless of which market you choose to be active in, you will be unable to move it one way or another. It is the other ones, the big professional actors who move the markets. Let this fact teach you to be humble, but don't let it intimidate you too much. Your status as a small fish means that you are flexible. You are not subject to investment guidelines or other practical constraints. Your niche isn't competing with anyone. You are trading under the radar of the big fish. and you become profit from that fact. And as a retail trader, this is what we are trying to do, to be honest. So this book is addressed to all market participants, whether you are a short-term trader or long-term investor. The psychological effects apply to you all, albeit to different extents. You will be sure to profit when you understand how the distorted and biased way you make financial decisions affects your portfolio. Neither will it hurt to see to what extent your trading performance depends on your emotional state. You will find out if you read this book from start to finish, you will be in a better position, point one, to know whether trading really and truly is something for you. Okay, you've been trading and you've been experiencing difficulties. After reading all this book, you'll be able to determine maybe trade is even for you in the first place. So we're going to discover all that from reading this book. Find out which career traits and core competencies are needed for trading. Familiarize yourself. We're going to find out which character traits and core competencies are needed for trading. We're going to get familiarize ourselves with mental self-coaching techniques and understand how to develop psychological resilience and mental strength. And that is true. Trading is personal business. You're on your own, or you're everybody. Wow. Understand that development, this is another point, to understand that developing as a trader involves psychological development. So we need to also develop psychologically. So conventions used in this book. This book is written in the most practical and realistic manner possible. Regarding the topics of trading psychology, I avoid complicated and extensive scientific explanations. I hope you can forgive me that my explanation about exciting discoveries in modern brain research tend to be a tad theoretical. After all, neurofinance is my passion. The author is telling us about himself. If you are keeping track, most of the more theoretical paragraphs in this book spot the technical stuff icon. If you're familiar with For Dummies book, you understand that. I am looking forward to your feedback and opinions. I am grateful for any suggestion and corrections. Please share your experience. That will provide material for any revised editions. If the topic in this book speak to you, or you realize with some embarrassment that you are not familiar with one particular corner of the trading world and you want to inform yourself, go to my website. His website www.roland slash hurish.com. The Hurish is spelled UlliRich. There you will find a wealth of blog articles, videos, coaching materials, and workshops. What you don't need to read. Okay, this book is structured in a reader-friendly way. That means you don't need to read it. It's 300 pages from beginning to the end. Browse the book at your leisure and read the parts and chapter. But here we are going to read everything. So these are the foolish assumptions of the book. And it reads, because you are obviously interested in the topic of trading psychology, I assume that you have some experience with the stock exchange. Like I said in the beginning, if you don't know some certain things we are talking about, you won't be even in the first place. So that means you have presumably made profit or and losses with your own money. There is a slight chance you may have experienced a number of involuntary emotions outburst. In my experience, some people will have experienced more severe losses. In any case, you should understand that psychology plays an important role in trading. Here are some further assumptions I have made about you. Okay, he has made some assumptions about us that we want to understand what goes on in our brain when we make financial decisions. We want to know that what influence evolution has had on our thoughts and behavioral patterns. Sometimes you can't get a grip on your emotions. You need support when you experience fear and stressful situations. You want to learn how to make better and smarter decisions. You want to be able to deal with unavoidable losses in a more sensible manner. You are looking for methods to develop mental strength and psychological resilience in trading. You can't find a strategy, niche, or trading style that suits you. You want to know which character traits and core competencies are important in trading. You want to know whether trading is truly something for you. These are all the assumptions that the author has made about us. How this book is organized. The book has six parts. It's simple structure, it's easy to understand and should help us. Part one, these are all the parts. As we're going to read it through all of them, so I guess the icon use, we really don't need all these ones. Beyond the book, in addition to introduction, you are reading, introducing us to something. What next? Now you have had a chance to read the operating manual for this particular book. I hope you realize what you are in for. So get going. Start wherever you want. When it comes to its 300 pages, look for topics that most interest you. Use this book as a reference book and advisor. Try out the techniques and exercise provided. They are definitely worth your while and they will prepare you further down the road of trading success. I hope you have a lot of fun with these lessons and that you have lots of success implementing them in the exciting world of trading. I guess so. So, part one of the book, The Suffering Trader. So in this part, we are expected to see why humans have such a hard time acting successfully in the financial markets, trace the evolutionary development and neuronal structure of the human brain, master the art of brain compatible training, and build on your strengths and cope with your weaknesses. That's a very important something. So, chapter one, brain compatible trading. So, in this chapter, seeing how human evolution has impacted financial decision making process, these are the goals of the book. Or this chapter, looking more closely at traders' brain, understanding the neurocircuits and biochemical processes, tracing the miracle of neuroplasticity, using process orientation for success. So, chapter one, brain compatible trading. So, we've gotten to the real deal of the book, and this is episode one of this book. And mind you, we are here to study the book together, and I guess we're going to get far with it. So, chapter one, break compatible trading. That's the chapter of the first. That's the chapter title, brain compatible trading. In this chapter, I take you way back across millions of years. The evolutionary selection process has made us humans what we are today. Okay, we must take that knowledge into account when we are surprised about behaviors that no longer fit in our modern time, including behaviors on the trading floor. To better understand what's going on, it pays to take a closer look at trader brain. Okay, for us to understand, we need to take a closer look at our brain. I hope to convince you that this closer look will provide some answers. Okay. So modern brain research has made some exciting discoveries about how the decision-making process actually take place, okay? Which parts of the brain are involved and which biochemical processes occur simultaneously. For example, in fact, the research has progressed to such an extent that experts in the field are able now to predict financial decisions by the activity of specific area of the brain. Okay. In fact, let me take that sentence again. In fact, the research has progressed to such an extent that experts in the field are now able to predict financial decisions by the activity of the specific area of the brain. Okay, I guess we're going to get that statement much better when we continue reading. By their very nature, your brain and its interconnections are not quite suitable for the trading business. Okay, but you can train them to overcome their inherent weaknesses. The human brain is changeable and can adapt to changing conditions. That's a good thing about our brain. In other words, you can learn behaviors for successful trading, brain compatible trading in order was. I guess that's okay. So the key to successful trading is process orientation. Process orientation. The key to successful trading is process orientation, what I call the systemization of your trading approach. Okay, to systemize our trading approach, you need professional rules and a proven trading strategy in order to survive in unpredictable markets. When you add to that a trading style that suits your personality, there may not be much holding you back when it comes to a successful trading career. So let's take that again. We need a professional rules and a proven trading strategy. I believe we all have strategies, but we need some professional rules in order to survive in unpredictable markets. When we add that to a trading style, okay, our style of trading that suits our personality, there may be not there may not be much holding us back when it comes to successful trading career. Believe by God's grace, we're going to all have successful trading career. So, recognizing the human barriers to trading success. Recognizing the human barriers to trading success. Okay. In the last decade, science has closely investigated human behaviors in the area of economic decision making. Science has closely investigated human behavior in the area of economic decision making. Okay. The findings are sobering. The science tells us that humans are characterized by emotional patterns of thoughts and behavior that have been formed in the course of evolution. The science is also telling us that there is a good chance that this subconscious automatic behaviors are unsuitable when it comes to making wise financial decisions. In numerous studies, behavioral economists have demonstrated how irrational humans are when they are making investments. The truth is, financial decision making behavior can be distorted by many factors, including this overestimating our abilities, learning from our mistakes seems beyond our power, letting emotions such as fear and greed unconsciously determine our behavior when making financial decisions, letting ourselves get carried away by the crowd. Okay, being unable to objectively assess risk, letting the situation rather letting the situation rather than calculation determine our patterns for risk, taking profits too early and letting losses run on. So these are the truth is financial decision making behavior can be distorted by many factors which we've just talked about here. So taking a closer look at the brains of investors and traders demonstrates why the failing listed here occur. Failings listed here occur, and now they impact the decision-making process. Laboratory experiments within the relative young field of neurofinance provide some exciting answers. Let's see the answers. Sorry for the background noise. So using neurofinance to look deep inside the trader brain. Neurofinance is an interdisciplinary area of research that resulted from the combined effort of economists, behavioral psychologists, and neuroscientists in the 1990s. Neurofinance research by making use of modern brain research method focuses on analyzing financial decision making processes. These are the central questions. How does the human brain deal with money? How do our brain deal with money? Which neural structure are involved in processing financial decisions? What is the importance of the biochemical processes in the brain which when it comes to dealing with money? Neurofinance studies Neurofinance studies of the drivers of choice behavior pay special attention to the trading behavior of financial market actors, focusing on the central question of how behavioral and cognitive biases distort the rational decision making of investors. Another aspect is the influence of personality traits in investor behavior. We should remember this. Okay, the neurobiological correlates of financial decision making processes have been decoded. Okay, a brain scanner can display the enormous influence of emotions, cognitive biases, and archaic instincts in real time. Most of the time, most of the time, humans may not act rationally. Many of the phenomena described in behavioral finance research can be explained by taking a closer look at the trader brain. Today, brain research are able to predict and influence investor behavior. Professor Ban Weber, a clinical neuroscientist and dean of the medical faculty at the University of Bonn, has come to the conclusion that because of their evolutionary developments, humans are incapable whatsoever of rational thinking and acting. That would also suggest quite early, in fact, that the human brain simply isn't made to invest successfully in the stock market. The laws and functioning of financial markets contradicts learned human behaviors. This is suggesting that what they've learned about our behaviors contradicts the laws that govern stock markets. So the development of the brain scanner with the help of new measuring procedures, brain research in the past 30 years learn more about the working of the human brain than in the previous 100 years combined. Neuroscientific research tool, in particular functional magnetic resonance imaging, fMRI, make the activity of the brain visible and show which regions are activated when carrying out specific tasks. You can see the brain at work in real time, so to speak. This means it is possible to analyze human behavior when dealing with money from a neuroscientific perspective. Experiments explain irrational financial decisions, emotions, and the impact of evolution on human behavior on capital markets. The neural networks in the human brain have developed over the past millions years and have adapted to the respective living conditions faced by said humans. We today are the result of an evolutionary selection process where the genetic makeup and the structure of the human brain has changed incredibly slowly. As a matter of fact, according to leading neuroscientists, the human brain hasn't changed much over the last 50,000 years. So, in the face of the rapid development of the world in the last centuries, evolution has been unable to keep up. Unconscious and highly automated behavior probably arose as the best possible adaptation to prevailing environmental conditions. Automated behavior, when faced with threat situation, probably kept human alive in Stone Age, fight or flight reflex. But present day threat situations still trigger the same stimulus response patterns. So this place is making a point that we have not changed in the last 50 years. Our brain still remain the same. So we are also to remember the following paragraph. The living condition of the human species have changed drastically, but evolution isn't that fast. The human brain comes from another time. Deeply rooted instincts still determine our behavior, especially when we are under emotional duress. This instinctual mechanism do not switch the way present day financial markets function. Humans are conditioned to act, while the stock exchange often reward patience and waiting. This is a very important fact. I mean, very important point for us. Humans are conditioned to act. We love action. We love making things like getting engaged in a lot of things. Why the stock exchange often reward patience and waiting. And most of the time, what do we do most? Even if you study our last week trade ideas and signal, you will see that only Monday that we perceive markets moving until we reach an area of struggle. That was the only time we take trades in the markets. And the second, following the second day, we believe maybe we're going to create an internal structure. But the moment we discover that there is no internal structure being created, then we stopped. We started waiting again. So we've got to be very, very patient, and that's what the market is all about. The stock, why the stock exchange often rewards patience and waiting. So is our evolutionary ancient brain system even suited to make sensible trading decisions? Neurofinance research has answered this question with a resounding no. So this book is letting us to understand that the type of brain we have, our brain, is not compatible with trading. So we just have to live with that. So we were given a brain to help us survive in a harsh environment. It is its nature isn't suited to make economically rational decisions in complex financial markets. So the brain function in fight or flight reflex. But we need to make a rational decision in complex financial markets here. So another subtopic is recognizing typically human behavioral patterns. So today we understand our brain over the millennia has always tried to adapt in the best possible manner to our respective living conditions. In comparison to the millions of years of our history of evolution, the past centuries are only a tiny window of time, but one with a dynamic speed of change that never occurred before this. That means the neural circuits in our brain may require a few generations until they have adapted to modern life. Okay. Therefore, it should come as no surprise that the behavior and thought patterns of many market participants are not always rational and therefore can be explained better with an evolutionary context. Okay. So deeply rooted reflexes and unconscious reaction from previous epochs seems to determine our financial decisions. This applies to individual traders as well as the majority of market participants. Strong price movements are emotionally contagious and can lead to collective herd behavior, like shepherd herd. That's why the stock exchange is at its most fundamental level psychology. To fully comprehend the psychological nature of the stock exchange, you must realize that the dominant emotions experienced there stem from another era and that they are characterized by irrational exaggeration in both directions. Speculative bubbles and stock market crashes repeat at regular intervals as the history of stock markets shows. This may sound quite sobering for traders, but it explains market realities, which is psychological in nature. Remember, don't let yourself be fooled. The neurobiological prerequisites for successful trading are not a given. Are not given. So we are not given that. But there is hope. You can balance many human inadequacies and learn to acquire the necessary equipment for doing compatible trading. It requires a lot of patience and training. Self-awareness and self-reflection are the first step. Self-awareness, you must be aware of who you are and reflect on who you are. So, as a trader, you should understand and accept how your brain works. Be clear that the structure of your brain isn't suited to financial market mechanism. As a trader, you should understand and accept how your brain works. There is nothing we can do about it. These are all facts. So our brain is not compatible with trading, but we just have to find a way to polish it, polish. So be clear that the structure of your brain isn't suited for financial market mechanisms. You have no other options but to accept that fact. You have only one brain. You have only one brain. So, another tip for us, you can't change anything about your genetic makeup. We can't change anything about it. But we can learn to deal more consciously with our emotions and neural reflexes. We need to do so from the position of an objective observer. So we need to be observing ourselves when you learn to perceive your response pattern in a more conscious manner. You can avoid all sort of evolutionary traps. You will be in a position to adapt your behavior to markets by observing, analyzing, and following the markets in a conscious manner. Our expert knowledge and our own analytical logical powers of thought can be called up only when we can reduce the negative impact of emotions. This is the only way to be balanced and in full possession of our cognitive capacity with unfiltered access to our intellect and intuition. Let's continue from our tips. So you can't change anything about your genetic makeup. We can't change anything about it, but we can learn to deal more consciously with our emotions and neural reflexes. So we need to do so from the position of an objective observer. So that's what the book is telling us, that we can learn and deal more consciously with our emotions. So the idea of this place is for us to be more conscious with our emotions and neural reflexes. So we need to do so from the position of an objective observer. So we need to be observing consciously our emotions and neural reflexes. When we learn to perceive our response pattern in a more conscious manner, we can avoid all sort of evolutionary traps. So, okay. And we will be in a position to to our behavior, adapt our behavior to markets by observing, analyzing, and following the market in a conscious manner. So we'll be in a position after we do what? After we learn to perceive our response patterns in a more conscious manner, we can avoid all sort of evolutionary traps. Okay, we'll be in a position to adapt our behavior to markets by observing, analyzing, and following the markets in a conscious manner. Okay, so our expert knowledge, our expert knowledge and our own analytical logical powers of thoughts can be called up only when we can reduce the negative impact of emotions. Okay, our expert knowledge, what we've learned so far about strategy, about what is it called? Analytical knowledge power of thoughts can be called up or only when we can reduce the negative impact of emotions. This is the only way to balance. Okay. So what we've learned about the markets, our analytics, logical powers of thoughts, we can call upon them when we reduce the negative impacts of emotions. This is the only way to be balanced and in full possession of our cognitive capacity with unfiltered access to our intellect and intuition. So we have to reduce the negative impact of emotions in our life. It is only then when we reduce the impact of emotions in our life, then we'll be able to use our expert knowledge and analytical logical powers. So this is the only way to be balanced and in full possession of our cognitive capacity with unfiltered access to our intellect and intuition. So we should also remember the discoveries of modern brain research can build a bridge between the realities of human behavior, and the way the financial market function. Neurofinance can provide you with an opportunity set with an important set of tools as you make your way down the path to becoming a successful trader. Okay, that's a promise of neurofinance. Okay, so leveraging neuroscientific discoveries. Accept the limitation of the structures of your brain. Initially sound Accepting the limitations of the structures of your brain initially sounds frustrating. It's very frustrating because this is telling us for a fact that our brain is limited. So, and accepting that limitations, It can be frustrating. However, modern brain research has some good news. The human brain isn't hardware, it is capable of change throughout our lives. Throughout our lives. So technical stuff 50 years ago. 50 years ago, science was still convinced that human brains were fixed and incapable of change. Today, we know that the central nervous system and our brain slowly but steadily change in response to our actions and experience over the course of our entire lives. Whew. So that's the good news. 50 years ago, they thought our brain can be changed. But now, it's, we now discover, or we know, with technology, they now know that, okay, we can adapt to new environments. So neurona, also known as a synaptic plasticity, refers to the ability of our brain to change and optimize processes and sequences when used effectively. Okay. So to simplify, one can say that the brain works like a muscle. When you don't use neuronal structure and synaptic connections, they tend to degrade over time. Networks you do use intensively tend to stabilize and strengthen over time. So this is visible on the brain scanner and can be easily recognized. Okay. The psychologist Donald Ebb is considered to have discovered synaptic pla- plasticity. In 1949, he formulated the learning rule named after him, Ebb's rule, which states that learning processes take place in neural networks by means of synaptic transfer between neurons. In other words, neurons that fire together wire together. Okay. Consistent repetition creates stable new connections and strengthens memory. Okay. I guess we are learning something here from that. So neuroplasticity always works in both directions, independent of age. Independent neuroplasticity always works in both directions, independent of age. By that, I mean that you can lose ability if you don't use them. If you have some kind of ability, we can lose them if we don't use them. Learn abilities if you practice them consistently. Okay, that's a good news for us. So if we don't practice, if we don't use our abilities, we can use them. We can learn new abilities if we practice them consistently. Okay, that's good news. You probably use a navigational system when you're driving in an unknown area. Hmm, that's true. It is practically basic equipment for cars these days. This leads to cognitive offloading, where the hard work of cognitive processing is shifted to somebody or something else. The evidence for such cognitive offloading is quite clear. As research and our brain scanner shows, research has proven that our natural orientation skills significantly worsen with the use of navigation systems. Okay. The determining factor in learning any new skill is regular repetition. So for us to perfect our trading, perfect the way we think, perfect our emotions, we have to learn these skills on a regular repetition. Practice makes perfect, as the old saying goes. So we can do anything we want if we practice regularly and intensively. Abilities are not genetic. There is no natural talent for trading because it is now a simple matter or to open a trading account and just start trading. Lots of newbies underestimate the amount of time, stamina, and practice required in order to trade successfully. Okay, So practice makes perfect. I guess the what we are learning here can be applied to different aspects of our lives. So we have to remember, according to the best-selling author Malcolm Gladwell, you can achieve anything with discipline and hard work. Hmm. In Outlier, his book from 2008, he explains how extremely successful people, athletes, and professional musicians, for example, train on the average of 10,000 hours over the course of their career. Practice is much more important for success than talent, the author claims. So that's a very big something for us to know. So continuing to our next subtopic, which is trading success factors. So trading success factors, the factors that determine trading success. Even if current studies on the topic of peak performance in general come to the conclusion that talent is the most important factor when it comes to success, this applies to only a limited extent to the trading business. If you want to be successful in trading, you require large measures of motivation, discipline, and stamina. All three have to have more to do with attitude than with talent. Okay? Motivation, discipline, and stamina has more to do with attitude than with talent. Without the appropriate mindset, you won't achieve your goals. Without the appropriate mindset, you won't achieve your goals. If you want to master your field, without the appropriate mindset, you won't achieve your goals. If you want to master your field, you need to develop constantly and train consistently. If you want to master your field, you need you need if you want to master your field, you need to develop constantly and train consistently. If we want to master our field of trading, that's what we're studying currently. So if we want to master our field, we need to develop constantly and train consistently. Expert status will not just fall from the sky, and you certainly don't get it at best. So training and performance are tightly linked, no doubt about it. So training and performance are tightly linked, no doubt about it. So if we want to master our field, we need to develop constantly. We need to develop constantly, which is what we are trying to do now. We're trying to read, we are developing and train consistently. We got to train consistently. Expert status will not just fall from the sky, and you certainly don't get it at best. So training and performance are tightly linked, no doubt about it. So I guess that's a very important note for us to kind of note. I like this glass. It shed away all the blue lights. And I'm more comfortable reading with it than facing the blue lights, just like that. So training and performance are tightly linked, no doubt about it. So in looking at trading success, I've determined that there are a few basic success factors, all which can be divided into four main areas. Number one is processes, practice, personality, and talent. Okay. So the secret to success in trading, how many something, 0 to 1 gig sometimes. So the secret to success in trading is to have clear processes. The secret to success in trading. If we want to be successful in trading, the secret to it is to have clear processes. We must be clear. The process of doing things must be very, very clear, and structures as well as predefined strategies and trading plans. I guess when we are reading, there are a lot of things that we will come across. There are a lot of things we would have been doing. So, number one, two objectives of learning and reading is to number one, we are kind of we want to see ourselves. This book is written for us to know how to be successful in trading. So when we are reading through it, two things will be discovering what we are doing correctly and what we are not doing correctly. So the book will now serve as a filter, as a glass, as a mirror for us to reflect on. So this person has sat down, wrote about many things that will make comprises of a successful trader. So it will now serve as a mirror for us. Many things we just read because we are already doing it. So it won't ring a bell. And many things because we are not doing it, we ring a bell and it will draw our attention closer. So a lot of things like that. So we will be having some moments within the book. There are some things that we hit differently. So, but if you are watching, you can easily pause to resonate whichever aspect of the something that resonates with you, you deal with it. And personally, whatever resonates with me, I deal with it also. So, but it reflects in my own tone of reading the something. So, I guess that's all. So, the secret to success in trading is to have a clear processes of which I have that. And if you have that too, that's a good thing. If you don't have a clear something. So, and structures as well as predefined strategies and trading plans. So you need to have clear processes and structures, of which we have, as well as predefined strategies and trading plans, of which I have those tools already. So that we already possess that secret. So it's only time. With time, we're just going to implement. We're going to get to know what we still need to add more or something. So, so we have. So you must train for this. You must train for processes and structures as well as predefined strategies and trading plans. You must train until the feast sequences become part of your flesh and blood. Okay, I think I've gotten to that level. Routines provide you with the support and stability you need in stressful situations without having to think about them. So that's the reason why the benefit of having routines. So habits keep your head free. When once you've already have the habit of reading, the habit of analyzing before trading, not just that you come to the market, you see something and you jump on it. Saving cognitive energy that you can use for more important tasks in trading. Formulated in a neuroscientific manner, repetition builds and consolidates the neural circuits of process orientation until they can be recorded automatically. This doesn't sound particularly exciting, but it is the key to success. After all, your behavior won't change by changing your opinion. A new conviction is formed only when you have drilled the new behavior into you. So we're going to read that again for proper understanding. And sorry for the background noise. Sorry for the background noise. It's again learning how to go on. So let's continue. The secret, like I said, I'm going to take it again. The secret to success in trading is to have clear processes and structures, as well as predefined strategies and trading plans. You must train for this until the fish sequences become part of your flesh and blood. Routines provide you with the support and stability you need in stressful situations. Routines provide you with the support and stability you need in stressful situations. So if you know what you're supposed to be doing, by the time you're supposed to be doing it, by the time you're supposed to be doing it, then it will save you. You need a stressful situation without having to think about them. You don't have to think about them. You just have to look at the time and determine what you're supposed to be doing. So, habits keep your head free. So, if you already have the habit of doing something, it keeps your head free. You don't have to be thinking, you don't have to think about them before you do them. So, saving cognitive energy that you can use for more important tasks in trading, formulated in a neuroscientific manner. Okay, repetition builds and consolidate the neural circuits of process orientation until they can be recalled automatically. So if you repeat something over time, it will build and consolidate the neural circuits of process orientation until you can recall, they can be recalled automatically. So this doesn't sound particularly exciting, but it is the key to success. Repetition, key to success. We have to keep repeating something. Repetition is what brings about perfection. So repetition brings and consolidates neural circuits of process orientation until they can be recalled automatically. This doesn't sound particularly exciting, but it is the key to success. After all, your behavior won't change by changing your opinion. Opinion doesn't change attitude, and that's true. Opinion doesn't change behavior. So you have to keep repeating something. If you want different results, you do different something. A new conviction is formed only when you have drilled the new behavior into you. You have a new conviction when you've drilled a new something into you. So trading, remember, trading is particularly psychological, an emotional challenge that humans are not ready for in their new natural state. We are not ready for it in our natural state, and that's true. So tried and tested processes provide you with security and prevent old reflexes from taking over in stressful situation. So security, tried and tested processes provide you with security and prevent old reflexes from taking over in stressful situation. So that is that about that. And we have to understand that. Anyway, we've got to understand. We've got to understand that. So trading is a particular psychological and emotional challenge that humans are not ready for in their natural state. Tried and tested processes provide you with security and prevent old reflex from taking over in stressful situations. So we've got to try and test our processes. So your personality as a trader plays an important role here. Our personality, just like I one in my stated mantra for trading. So it says what the way you do one thing is the way you do every other stuff. So since I'm uploading this thing and the background noise is overcoming my voice, I guess I have to kind of stop here, and we guess we're going to continue from here later on. Okay, we're about to finish chapter one, so let's just finish the chapter and move on to another chapter. So the purpose, if there is anything I'm learning from this chapter one is repetition. Repetition. We have to repeat new attitude that we are learning that will make us successful in markets. We have to keep repeating it till it will become they occur to us naturally. So our personality as a trader plays an important role here. So this is because markets will hold up an unfiltered mirror to you. Come on. So your personality as a trader plays an important role here. This is because markets will hold up an unfiltered mirror to you and will lay bare your specific strengths and weaknesses. Come on. So this is why having a good mix of strong personal characteristics and competencies is so important in the market. So every trader has individual talents for certain trading styles and market segments or niches. Okay, so with a lot of practice, you can perfect your personal abilities. In this way, you will become an expert in your particular niche. The trick is finding. So every trader has individual talents for certain trading styles, which is true. Some are good at trading position. I mean, position. There are some are good position traders. Some are swing traders. Some are day traders. Whereas some are scalpers. So that's their own style of trading. But then market segments or niche. Some are good at trading futures, crypto, what is it called? Currencies, indices, or niche, whichever one. that commodity, metal, or whatever something. So a lot of people certificate for deposit niche, whichever niche, speculative niche. So with a lot of practice, you can perfect your personal abilities. Practice, repetition, you can perfect your personal abilities. I hope you can still hear me clearly because of the background noise. So I guess you can still hear me clearly anyway. So in this way, you will become an expert in your particular niche. The trick is finding the right trading environment for your personality. The trick is finding, and personally, and if you see me giving any trade ideas on Signal, I stick only with Euro USD because I find myself comfortable and it fits with my strategy, and the kind of strategy I have used fits well with my personality. So, and that's the reason why, and I've chosen that, and that's my thing. So the trick is finding the right trading environment for your personality. For more on how to determine your trader personality and trading style, see chapter 3. We're going to get there. So using psychological testing tools to identify your personality traits and determine your fields of competency helps you discover your special strengths and develop them in the most effective way. I can assure you that this method has helped many traders achieve real breakthroughs in their development. So this is why it is in your hand, well, your head to be exact, to create the prerequisite and foundation for successful trading. Oh, Aliwa, Josilawa Elumi. So remember, expertise requires many years of hard work and a lot of practice. What sets successful traders apart is goal orientation, a strong will, a lifelong desire to learn, and a willingness to always develop further. So the brain of a successful trader has developed and consolidated the corresponding neural circuits because, as you have now found out, trading is first and foremost a head thing, not a market thing. As you can see, we've come to the end of chapter 1, and I wish to go further because this way we'll be able to read more and more and more and more books together so that at least we get ahead. And with what we have here now, I guess we have to stop because of the background noise. I mean, background noise. So, but for what we've learned here, trading is psychological more than it's market. And it takes repetition from us. We have to be engaged in it over a long period of time. Initially, when I started trading, I believe I was thinking within 3 to 6 months, if I learn hard, work hard, and those times I don't sleep, I will learn till 5 o'clock in the morning, wake up by 8. I only have 3 hours of to sleep. 8, I'm up again, learning again rigorously. I even borrow money to buy courses so that I'll be able to learn and learn and learn and learn and learn. And here we are today. We've grown beyond that and we are still learning. So we have to keep reporting. And this year marks my 6th year. I'm going into my 6th year as a trader. And we are yet to buy Lamborghini or Ferrari, but eventually that's not the something. But the major something is for us to be able to become successful, not to live a flashy lifestyle. Oftentimes, which are fake, but nonetheless, here we are. We are progressing. We are moving forward. Either fake or not fake, it doesn't really concern us. We are only concerned with who we are and what we can achieve in the market. But for now, we've learned through our trading, through our learning and reading this book that we have to repeat a very good processes in the market for us to do what to proceed to become a successful trader. We'll stop here for now because of the background noise. Thank you very much. Have a lovely and a profitable day and a relaxing weekend. God bless us all.